How high can Bitcoin actually go this cycle? While predicting the exact top of course, completely impossible. We can actually make some pretty interesting educated guesses, stand on the shoulders of giants, and look at some interesting ideas here. So let's, in this video, look at the catalysts that are driving this bull market, draw some charts, and look at how averaging the wisdom of the analyst crowd could help us predicting, well, where Bitcoin could be going in the cycle. Now, one way to look at the Bitcoin price is from the angle of two financial systems. You have the traditional financial system, and you have the crypto financial system. So these are like communicating vessels. Money can flow between the two. So for crypto prices to go up, buyers need to have money from the traditional financial system. The money is created by central banks who provide banks with monetary ammunition to lend out more to people who go and speculate. Now, there's a fancy word for all this. It's called liquidity, and it ebbs and it flows. And in some periods with low interest rates, quantitative easing, and stimulus checks, money from TradFi flows richer than ever. At other times, you have high interest rates, tight fiscal policy, money is sucked back into the traditional system. And crypto prices go down, often dramatically and painfully. Here's a graph from the Global Macro Investor. The common way to measure liquidity is by the so-called M2. That's the total money supply, including all the cash people have on hand, plus all the money that's deposited into checking accounts and savings accounts and money market funds and all that kind of stuff. Now, notice the correlation between the year-on-year change between global money supply and the change in the price of Bitcoin. Not a math doctor here, but that feels kind of relevant when you look at the chart. Now, look, if liquidity goes up, then basically number goes up for Bitcoin. Whenever the growth in money supply falls to zero or even goes negative, Bitcoin gets smashed and then shoots back up again whenever they start printing money again. Money printer go burr, baby. As you can see, global M2 growth bottomed together with Bitcoin in late 2022, and ever since then has been trending upwards, just like Bitcoin's been trending upwards. Bullish. So that's the monetary ebb and flow. But for money to flow into BTC, into crypto in general, you need on-ramps. You need the floodgates to be opened. Without a gate, the water can't flow between the traditional finance system and crypto. So here's the BTC chart with some historical floodgate launches until around 2012, when user-friendly exchanges such as Coinbase launched. It was very, very hard for the general public to get Bitcoin. If you look back in the history, there were people like literally going to like some parks and stuff in New York and just giving people cash and getting Bitcoin sent over. That's crazy stuff. There was no easy gate, no on-ramp back then. In 2013, the Grayscale Bitcoin Trust launched so that accredited investors gained a gate to be exposed to the BTC price. The next big floodgate came in 2020, when apps like Cash App and Robinhood and PayPal all started allowing users to buy Bitcoin. There was a lot of new exchange launches and stuff in between those two big events. The most recent and probably most impactful floodgate is, of course, the launch of the spot Bitcoin ETFs in the US markets. We did get Canadian and Brazilian and some European ones over the past few years. But with the push of a button, every investor and wealth management platform in the world can now add BTC to their portfolio via these US Bitcoin ETFs. So to sum up this point, incoming flood plus new floodgate equals number go up. But by how much? Well, let's do some technical analysis. Let's get some charts out here, guys. But before we go into those price targets of the current cycle, let's zoom out a little bit. Here's the Bitcoin Power Law Corridor model. Now, this model isn't new, but has gained some renewed attention in recent months. It's been holding up pretty well and is relatively easy to use. Just look at it. Contrary to the common log linear plots, the Bitcoin Power Law uses logarithmic scales on both the x-axis and the y-axis. This way of plotting strips away day-to-day volatility and reveals an interesting relation between price increase and time increase. What the model roughly says is that it takes Bitcoin 50% extra time to go up another 10 times in value. As an example, let's, for the sake of argument here, assume that we will reach $100,000 in January 2025. Just an example. That's 16 years after Bitcoin's launch. The time it will take BTC to reach $1 million per coin, according to the model, will be 50% more time, so roughly another 8 years, around 2033. Now, this model has so far held up pretty well since Bitcoin was worth pennies. Of course, there are wide uncertainty bands within the volatile price jumps up and down, so that's worth considering. Now, at the time where most people project the top of the bull market, that comes actually to be the second half of 2025, the model puts the Bitcoin price anywhere between $50,000 and $500,000. Yeah, big range of variation there, huh? With a fair value at 130K. So let's keep this model just in the back of our minds as really a very broad reference point, okay? Now we'll dive into some more detailed price predictions. By the way, if you want to know more about the Power Law model, a recent addition to our free Wealth Mastery newsletter actually included a very nice in-depth article on this model. You can go read that for free on our site at thewealthmastery.io. But the Wealth Mastery newsletter not only includes these kinds of articles on price prediction models, but also huge amounts of basically just money-making alpha and insights every single week on airdrops, altcoin news, deep dives, NFTs. Look, my team and I spend about 40 hours a week putting this bad boy together so you can get it into your inbox and have everything you need to know to have your crypto week go successfully. 110,000 plus weekly readers reading this bad boy every week. Sign up for free using the link in the description or the pinned comment on X. So let's talk about diminishing returns. The power law corridor model shows us a straight line up. That's because time on the x-axis is compressed. But when measured in straight months or years, it takes BTC longer and longer to reach the same percentage gains. Put in a different way, the percentage gains per 4-year cycle have diminished since the first halving. Now, don't let this bum you out, okay? In absolute terms, the gains still increase every cycle, even though BTC's market cap increased a 40x from 8 billion in 2014 to 320 billion in 2017. The near 3.5x in 2021 meant almost another $1 trillion in market cap being added. Now, what will this mean for this cycle's top? Well, here's a chart from lookintobitcoin.com. The percentage gains from bear bottom to bull top decrease with very roughly a factor of 4 each cycle. So this implies a 5x from this cycle, for this cycle from the lows. So that roughly gives us a $90,000 Bitcoin. Obviously, we hope we're going to do better than that, right? That seems like a pretty lame prediction. But let's just get that bearish scenario put out there based on this model. Now let's move on to the more bullish way to look at diminishing returns. Here's a chart by Crypto Amsterdam. Unlike the previous example, he doesn't take the bear market lows as a reference point, but instead the Bitcoin halving as a reference point. What is the price of the Bitcoin halving? Okay, he notes that gains decline by about 72% per cycle post Bitcoin halving. The last cycle saw roughly a 700% gain post Bitcoin halving, assuming a similar pattern and a similar level of decline. The potential top could be $175,000, starting from a halving point of, let's say, around $60,000. That sounds like a much better number, doesn't it? But there's much more to say here. Fibonacci levels. If you've watched videos on price predictions for crypto or really any kind of asset, then you've probably come across the old Fibonacci, man. Whenever the price falls back or shoots up past new all-time highs, these levels represent different percentage gains or losses. The price often will find support or resistance at these particular Fibonacci levels. The Fib levels are based on previous movements. Prior price swings historically can sort of almost predict future price swings. It sounds crazy, but it kind of works out. Take the bear market of 2018 as an example. The price dropped from roughly $20,000 to $3,000. When the bull market returned in 2020, the most used Fib level, the 1.68 for this particular retracement, shows a price of 62K, which is indeed roughly where the price topped out in 2021. There's different ways of looking at the Fibonacci charts, by the way. I sometimes chart this as 3.618, but still just keep it simple for this example. Now, applying that same logic to the upcoming all-time highs, the important 1.618 Fib level brings us to roughly 174K. That's a 2.5x return compared to the prior bull market top, which is in line with the diminishing returns principle that we talked about, as the bull market before that had a 3.5x from top to top. Still, don't expect this fib level to perfectly hit with perfection. For example, based on this level, the 2017 bull market should have actually topped out around $4,000. There's some reference for you. It actually went all the way up to 20K. So it's not a perfect predictor by any means. Maybe it's not even being bullish enough. So let's go to the fun part and look at some price targets from some different renowned analysts in the crypto space, some different veterans from the markets. First, we have Peter Brandt. He was already trading chart patterns of commodities like heating oil when I was probably in my diapers still. Okay, so there's that. Anyway, when someone showed him the Bitcoin chart a decade or so ago, he admitted that it was really trading unlike anything he had ever seen before. And he's paid quite close attention ever since then. Now, in this chart that he shared with Real Vision last year, he predicted that the current parabolic phase for Bitcoin is going to break at around $150,000. In a more recent tweet, he actually upped his target to around $200,000. And what about Raoul Pal? Well, the earlier chart of the global liquidity is actually from Raoul Pal, global macro investor. This former Goldman Sachs hedge fund manager turned crypto bull. No one's bullish enough, guys. No one's bullish enough except me, Real Bull. Anyway, we see the liquidity as the main driver of crypto prices. His liquidity predictions lead him to a chart to see a BTC price of already 218K in 2024, topping out at 520K in 2026. It's a figure even he has a vocal bull finds sometimes hard to believe. Maybe divide this figure by 2. Just to keep things same. Now, he assesses himself in his videos, of course, in this topic. So, look, we started this video with a rather bearish price prediction, so it's only fitting to, of course, end it with a more bullish price prediction. Now, do I believe that Bitcoin's market cap could, for example, overtake gold? Sure, absolutely. But do I believe it happens this cycle already? No, I'm not so sure. But you have some respected Bitcoin OGs, some different analysts such as Tour de Meester, David Bailey, who are predicting that, yeah, actually, this is a cycle we're going to take out gold. I don't know, maybe chill out on that a little bit. But if it did, that would imply a $600,000 Bitcoin. At that point, Mayor Raoul's model is not so crazy after all. The reasons they think this are possible are the way that gold ETFs see outflows, while new BTC spot ETFs will see inflows from those gold ETFs because obviously Bitcoin is just better than gold. Here's a late February chart of BTC inflows, by the way. The pattern is pretty gosh darn clear. At the rate of which gold ETF is being overtaken by BTC, maybe we do get gold parity sooner than later. 600K, I'll take it. Tour de Meester and David Bailey think that this could be possible. Personally, again, I don't think we see such numbers until the next cycle, but I'd be pleasantly surprised if we do see it sooner. Anyway, this is just kind of a short list of price predictions, but I hope that you get a sense of the direction that we're heading. And do let me know down below what your price prediction is. Where do you think we're going to head this cycle? Look, liquidity is on the rise and a new floodgate has just been opened. It's pretty hard to fade that when you understand that. And this no doubt explains many of the rather bullish price targets that are happening right now. Why people are upping their targets because Bitcoin ETFs are just that bullish. In fact, I came across a file of an analyst who averaged a few dozen price predictions of notable chartists over time. And the median top prediction, 245K. Not bad. But, Lark, surely these Bitcoiners, they're just in their own bullish bubble, right? That can't be real. Didn't every Bitcoiner last cycle predict 100K? Ugh, guilty. And we only got 69% of that target. That's true. This is true. But wait, what's 69% of 245K? 169K. And that's almost exactly what the 1.618 fib line that we drew earlier comes up at. Make of this coincidence what you will. Thanks for watching.